All right, before we continue with our section on Fibonacci, Fibonacci convergences, and some of the more advanced Fibonacci, what I want to do is I first want to show you how this tool is used and interfaced with the charts. Now, on this particular software, as in on any software, what we'll do is we would find there's a Fibonacci tool Fibonacci retracement tool. On this particular software, it has retracement and extensions, but what we're going to do is I'm just going to sort of show you first quickly how it's used. Um, just looking at this downswing here, I'm going to show you how we pull the Fibonacci from this high to this low down here. This is a price swing from that high to this low as it retraces almost 62%, and then it falls 162%. But let me show you let me show you how this tool, I'll show you the components of this tool. So if I highlight the tool, right click and click edit, then the parameters, the retracement parameters window comes up. And in these little boxes we can put as many retracement levels as we like. What we've done here is we've put a 0 level and a 100 level, which is the high, which is 100, and the low, which is, let me turn this around for you actually. Let's delete this, and I'm just going to draw this on the chart like this. All right. This would be our 0 line. These are our retracement levels: 38, 50, 62, 79, 100, and our extensions of 127, 162, 262. Now let's have a look at what this looks like in the parameters window. We have 0. This is 0. 38.382, which is the 38% retracement. 0.50, which is the 50%. 0.618, which is the 62% retracement level. 0.786, or the 786, which is the 79% retracement level. And 100, which is the 100% retracement level. The extensions are, what we have to do is we have to trick the software, and we put in there minus 0.27 because it is not a retracement level, it's actually an extension. So we are on the opposite side of the retracement. So this is 127% extension, and we put minus 0.618, gives us 168% extension, and minus 1.618, which gives us 262% extension. And whatever software it is that you're using, you'll have a similar parameters window that you can work with. Some of them you have to trick a little bit, and while others are pretty much formatted for you but are limited in use. All right, let's just close this off, and now what we're going to do is we're going to move to an application of the program. And once again, I'm going to go and I'm going to move a Fibonacci, or pull a Fibonacci onto this downswing right here so that we can see where this price has arrived. And you'll say, well, why did you take that swing? Well, I could take this swing up here as well, the big swing. But here I just wanted to take the level from where the move was initiated. And then we see this choppy price action retracing. We fill the numbers here almost to 62. There's the high is 87.74 to 79, so we're off here the 62% by 5 pips. Price falls down to 162% extension, this red line here. Now you see this black line right at the low of this candlestick wick. Well, you may wonder why that's there. I put it there because you see this low right here. If we look at the number on this low, The low is 85.30 and the low here is 85.29. Identical lows. You see how sensitive the market is. And what's nice about this low right here is this is a very tradable scenario. I hope you don't mind me mixing up some technical components into our Fibonacci software lesson. But you see the size of this move from 87 approximately 50 down to 85.50, which is a 200 pip move intraday. Intraday it actually starts up here, but 200 pip move. So we're at about max range, and when it gets to a low like that, price can be very sensitive as the flows have been been used up on this intraday move. You see, if you see it approaching a low like that, then that's a really good opportunity to make a long trade. Now what we're going to do is this, since this is potentially a reversal day as a result of the sensitivity of this low, we could see a retracement up to as much as 86.50, but let's watch to see what happens as we retrace into the next trading day. Let's just move forward on this. Now we reach a high of 86.40, and the high is becoming more distinguished now. If we're anticipating an up move, then what I would do is I'd take my Fibonacci tool and I would pull my Fibonacci from the low to the high, and now what we have here is as price retraces, this is our up leg, and as price retraces, we have the 38, 50, 62% retracement, 79% retracement, and 100. It's a fairly narrow swing, but we're just going to watch price as it retraces here. Price comes down and makes an effort. This is its effort to move towards these lows, and we like to see it come deeper. The deeper the better, somewhere between the 50 and the 79% retracement, or it could come all the way down and test. Here it is bouncing at the 62% retracement. Price is consolidating through the short-term downtrend line, and you see 8600 here. The figure is very sensitive. Price consolidated below 8600. Now it has broken above and seems to want to move higher. Our first target is 8640, then the 127% extension, which converges with these lows here at 8670, then 162% extension at 8700. Price moves aggressively through, and let's see how high it goes. It goes to 86.99. This is the sensitivity of the figure, which we're going to learn in a couple of lessons from now. It goes right to 86.99 and bounces at the figure. You want to see how big this bounce was? It was at least a minimum of 25 pips. Minimum 25 pips bounce, but I bet if we turned up or pulled up a 15-minute chart, we would see actually that the bounce was even bigger. So we bounce and then we penetrate through 8700, heading towards the 10-day moving average. We bounce at the 10-day moving average, and price continues upwards. What I would do now at this stage is I would pull a Fibonacci from this base of support right here where it initiated its move, and I would pull a Fibonacci here, and you see how price retraced to exactly the 38% retracement, and if this 38% retracement holds, then we can expect another leg up, an aggressive leg up. And here we see price moving. This is 100 pips in one move. And now we are at, where are we? We're at price rallies. It retraces 38%, and then it rallies again to 127%, and these highs, which is possibly a good short opportunity. If you traded these highs short, the high is 88.59, and here the high is 88.68, and we see a real nice rejection off of these highs. The bounce was 88.68 to 88.08, a 60 pip bounce. 68 pip bounce from here to here, and now price is consolidating above 8,800. And folks, that's how we use our Fibonacci tool and pull our Fibonacci tool. There are some software where you would pull it from the high back to the low, and I've seen a number of them out there that are like that. So yours may be may pull from the low to the high, or it may pull from the high to the low. What I would do now is I would take my Fibonacci, and I could either leave it at this low, or I could pull it on the last swing. And you see here on the last swing, as price rallied, it became supported by the 38% retracement level here, and our extensions are up, well up above. And that is your first lesson on pulling your Fibonacci tool.